Danilo, thank you very much indeed for joining us. What jumped out for you with these QSR numbers today?
I would say the resilience of the business, in spite of the quite challenging macro environment overall and more intensified competition. I mean, for Tim Hortons to be posting, more than 2% same-store sales when McDonald's is launching a $1 coffee in Canada is an impressive result. And so is perhaps also Burger King reaccelerating in the United States ahead of their biggest competitor. So the resilience of the business was really coming out loud and clear today. And it's also done in conjunction with franchisee profitability increasing, which is going to potentially help the entire system be more sustainable going forward.
Right. And Tim Hortons, I'm looking at the website, a 99-cent any-sized coffee, I think, if you're in their loyalty plan. And that's interesting. McDonald's, though, coming at them with $1 coffee in Canada.
That's right. I think that the competition is heating up a bit with regards to the coffee segment. But more importantly, I think Tim Hortons was also displaying their strength in the speed of service, which again is fundamental when 80% plus of your revenue is coming from drive-thrus. And so Tim Hortons being able to really speed up their operations is actually one of the key reasons why Canadians continue to go to Tim Hortons on a daily basis.
That's interesting. So Timmy's, whenever I pass a Timmy's or try to go there, there's a huge lineup. They have been speeding things up.
That's correct, yes. And they're also working toward continuing to focus on the speed of service going forward. I mean, this has been a clear focus over the past few years, but now they're also considering an improvement from the coffee quality with the newer espresso machines, as well as, those should be also helping on the speed of service as well. So all these elements should be increasing the appeal of the brand to Canadians on top of the greater value that they are providing today.
What about Burger King? That was a weak spot for restaurant brands for quite a while, but you say it's been growing faster in the crucial US market than McDonald's?
Yeah, and I would say, more importantly, what I really liked about Burger King in general was the more balanced approach on the same-store sales growth, in that they were growing, traffic, but more importantly, also on the average check, which is, again, is very important for their franchisees. They were demonstrating they were not simply buying the quarter and buying the sales with elevated promotions, but they were really conscious about the level of promotion that was also sustainable for their franchisees. And again, they are looking to increase their amount of innovation in 2025 and potentially help, families go back into the system, which should be helping the stock, but also the brand as a whole to be more visible in the future. And then, the second component is the remodeling effort. I mean, we are still early days, but Burger King is going to be having the entire, or I should say 80% plus of their system fully remodeled by 2028, which means we're going to be experiencing a brand new Burger King in just a couple of years from now. Mm-hmm. And this ramp up of remodeling really helps see the modern image and help consumers see Burger King with new lenses.
So people do care. I mean, I guess they want to go into a nice gleaming, futuristic looking store if given a choice.
Yeah, and I would say also people don't want to go into a store that looks empty, maybe because it's a little bit too big, especially if you look at this new seasonal format that Burger King is launching. Is a little bit cozier. It looks not only more modern, but also, more conducive to the type of experiences that consumers are looking for in a post-COVID world. And so I think it's actually not just the modern look, but also how you're engaging with the restaurant that really could be making Burger King more appealing going forward.
Danilo, thank you very much. And just remind us, what is your actual rating on restaurant brands right now?
Outperform.
Outperform. Thank you very much indeed for joining us.
Of course.